Asian stock markets experienced a significant decline on March 21, 2025. The MSCI's broadest index of Asia-Pacific shares outside Japan fell by 0.9%. This drop was primarily driven by growing concerns about the global economic outlook and the potential impact of new U.S. tariffs. Investors are particularly worried about the planned reciprocal tariffs set to be imposed by President Trump on April 2, 2025. These tariffs have injected a significant degree of uncertainty into the markets. The prospect of a trade war between the U.S. and its trading partners is weighing heavily on investor sentiment. The tariffs could disrupt global supply chains and dampen economic growth. This uncertainty has led investors to reduce their exposure to risk assets, including Asian equities. The decline in Asian markets reflects the broader global trend of risk aversion. Furthermore, there are growing concerns about the health of the global economy. Recent economic data from major economies has been mixed, raising doubts about the strength of the recovery. The International Monetary Fund recently downgraded its global growth forecast for 2025, citing trade tensions and tighter financial conditions. This has further contributed to the cautious mood in the markets. Adding to the market uncertainty are several geopolitical events. The recent Israeli airstrikes on Gaza and the Ukrainian drone attack on a Russian military airfield have heightened tensions in the Middle East and Eastern Europe. These events have raised concerns about the potential for escalation and further instability in these regions. Geopolitical risks are increasingly becoming a factor for investors to consider, as they can have a significant impact on market sentiment and asset prices. Meanwhile, major central banks, including the Federal Reserve, Bank of Japan, and Bank of England, have all opted to hold interest rates steady this week. This cautious stance by central banks suggests that they are also concerned about the global economic outlook and the potential impact of trade tensions. The lack of clear direction from central banks has added to market volatility, as investors are unsure about the future path of interest rates and monetary policy. The combination of geopolitical uncertainty and central bank caution has created a challenging environment for investors. The lack of clear catalysts for a market rebound has led many to adopt a wait-and-see approach, further contributing to the subdued trading activity. Amidst the market turmoil, investors are seeking refuge in safe haven assets, pushing the price of gold near record highs. Gold reached a new record high in the previous session and is currently trading at $3,030. This surge in demand for gold is a clear indication of the level of fear and uncertainty in the markets. Investors typically flock to safe haven assets like gold during times of economic or geopolitical stress. The dollar index, which measures the US dollar against a basket of other major currencies, remained stable at 104.09. The Fed's cautious tone, as indicated by their decision to hold interest rates steady, has provided some support for the dollar. However, the yen weakened against the dollar, falling to 149.50 per dollar. Despite this recent dip, the yen has still appreciated by 5% against the dollar since the beginning of the year. The performance of major stock indices in Asia reflects the broader market sentiment. The Hang Seng Index in Hong Kong experienced a 2% decline, marking its second consecutive week of losses. Despite this recent downturn, the Hang Seng is still up by 18% for the year. In Japan, the Topix Index reached an 8-month high, driven by strong performance in banking stocks and higher-than-expected inflation data. Japan's core inflation rate hit 3.0% in February 2025, exceeding market expectations. The near-term outlook for Asian markets remains uncertain. The combination of trade tensions, geopolitical risks, and slowing global growth poses significant challenges for investors. The market's reaction to upcoming events, such as the implementation of U.S. tariffs and further developments in geopolitical hotspots, will be crucial in determining the direction of the markets. Until there is greater clarity on these issues, volatility is likely to persist. Investors are advised to proceed with caution and maintain a well-diversified portfolio.